Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Green is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Seth Green.
Welcome to the Private Equity Profits podcast. This is Seth Green. Today, I've got the good fortune to flip the mic and be interviewing our very own host, Cliff Locks, founder of Investment Capital Growth. Since founding ICG back in 2007, Cliff has consulted with executives at Amazon, Best Buy, Black & Decker, Walmart, and many, many others. Before that, he founded and executed the sale of 3 successful companies, including one that was bought by a company owned by KKR. He serves on the board of directors and board of advisors of numerous entrepreneurial private companies. Cliff, thanks so much for letting me flip the mic on you today.
Seth, it's a pleasure to be with you. It's amazing what you and I have built over our careers, and the clients have been wonderful to work with, and we really enjoy working with the private equity community.
Absolutely. So let's go back in time a little bit. What inspired you to start Investment Capital Growth? I mean, you could have arguably rode off into the sunset off the sale, your company that was sold to Motor Trend, which was owned by KKR. You could have just driven off into the sunset. Why'd you start ICG?
I did retire for a couple of years.
That's how long you lasted. Got it.
And I just enjoy, working with some really, really bright individuals and scaling businesses. And that makes me extremely happy. When you're an entrepreneur, you enjoy work. That's really what it is. So as the managing director of Investment Capital Growth, and I'm a boutique management consulting firm, I focus on helping the private equity portfolio companies. And really what we're looking to do is just trying to better execute their growth strategies. And we're good at it. It's pretty exciting. The PE firms ask me to be an outside director. They're executive advisors, to the portfolio companies. I enjoy this work. I'm an expert at it. It's about empowering the CEO and the executive team to thrive and fulfill their vision of success. I'd like to hear from the PE partners, specifically what their vision of the success is. And then we integrate that when I'm sitting on the board, and we make sure that we're going to meet those metrics.
Now, you've had an incredible track record since starting ICG and worked with some household name companies. What are some of the most common issues that they're running into that you, as an outside advisor, outside management consulting firm, outside board of director member, are helping them with?
You're asking an important question. When you really look at the strategic part of it, we have 2 sides of it. One is on the portfolio company, and then the other side of it is on the acquisition side. So on the portfolio companies, we're seeing the cost of money is getting more expensive. Sales are starting to be a challenge, where it's taking longer to close sales. So the ability to have these high-level conversations where we're really looking at multiple streams of income, strategic partnerships, which will actually increase sales by 20-25%. That is the magic to be able to help these companies through a period of time where it is a little unstable. It's fair that it is. On the other side of it, if we're looking to acquire new companies at this point. It's been extremely competitive. The amount of dry powder that was sitting in the PE communities, I had somebody we interviewed actually on the Private Equity Profits podcast and in real estate. He says, the LPs, the limited partners, are throwing money at me because I have a track record. I have no losses, okay? And the third-party companies are actually validating the data sets, and that makes it so it's easy to communicate that, we're doing the right thing by the investors. And in this case, they have $100 million of their own money co-investing with the deals that they do. So it makes it easier. But the ability to go out there and really look at the teams inside those portfolio companies to figure out the strengths, very prevalent on Are we really looking at continuous education of the team members in those firms? Because somebody's going to leave the company. COVID was a wake-up call. There's no question to it. There's folks that have got lost, people have moved on. The virtual community at this point is pretty wild, right? We never thought, it would be that quick and we'd move over to a virtual type of delivery of, sales, service, marketing, et cetera. And it's happened really rapid. The ability to understand the culture within the company and bring that forward into all the branding and the marketing material, because the customers really want to know what the DNA of the company is. Your fine company over at Market Domination are experts at it. If you look at assessing, but also listening and understanding, we can turn that conversation around where we don't need to sell. We just need to educate, and the customers will buy because there's such a positive upside to have that strategic partnership with us. And I think your team is really, really good at bringing that forward in the engagements that you have. Some of the other things that I've been working on, it's been pretty exciting. I've had 3 different accelerators come to me and ask me to be an advisor. So this would be New Chip, Bolster, and Hyper Accelerator. To me, it's a privilege, for the amount of the deal flow is just amazing what comes through. It was easy to say yes to help some of the earlier companies. And that's part of the nature of the PE, because it's getting more competitive for the private equity companies. So if we go down a little bit earlier and we put some money in the A rounds, maybe even a little pre-seed, on that side of it, some of the folks that I'm coaching right now, easy, $50 million company. A few of them will be $100 million company. 2 of them, I think, are billion-dollar companies that are solving, because, we're looking at the metaverse and conversations with some of the large retail that's going on. I was on the phone with Microsoft yesterday. They're trying to figure out what to do with Bing. I says, guys, it's local. You're not going to be Amazon. You're not going to compete. But if you do it local and you really understand, you have the mapping software there, you can do it. And then on the other side of it was, there's moms groups. Our wives, probably your wife and my wife, belong to some sort of a local Facebook group.
For sure.
Very, very powerful to be able to resonate knowledge through that community that's trusted. And I think that's the magic word, is trust. The other side of it is, I've had the privilege of partnering with a gentleman by the name of Ash Singh. Ash is an esteemed professor from INSEAD. And INSEAD is the Harvard University of Europe and Asia. So here in the US, we may not be that familiar with it, but if we were in Europe and Asia, you would know that this would be the top MBA program. So he's running the Capstone EMBA graduate program, and him and I co-founded an M&A Hyper Accelerator program, a 13-week educational program. It's delivered over Zoom for 90 minutes a week. Our goal is just to ensure the students' companies have a 1.5x higher valuation and increase the confidence of the CEO and the executive team that's involved in the exit. How we structured it, it's week 1 is learning. Week 2 is homework, and you record a video presentation of the lessons learned. And then you share the video with your advisor, who meets with you on week 2, and we go over it. And it continues for 13 weeks, so it's back and forth. What's exciting? We're finding the students, they level up really nicely. And the success there has been tremendous. So you get individuals that are in the portfolio company. They may be over leveraged at this point. It might have been a leveraged buyout. We need to do something at this point. You need a liquidity. So the idea is you run them through a program where they become very comfortable in telling the story about their firm for the exit, get a higher multiple on their valuation of the company, and create the liquidity that you need in your private equity, because you may be getting some pressure from the limited partners. So yeah, the industry is a little nervous, but these are the type of educational programs that allow really looking at thriving and delivering high value, not just to the portfolio company, but the most important people, which really are our investors that are trusting us with their resources. So the advisors themselves all have built their own companies, have had multiple exits. A couple of them have had successful IPOs. Here's some of the topics we covered. Valuation analysis, understanding the contrasting buyers and sellers' motivations, building a strong foundation of M&A process and timetables, your company's due diligence and the financial analysis and building virtual data rooms, increasing your valuation, supercharging the value proposition and prepare your marketing, know your market and the benchmark your business, developing a truly profitable M&A business model. There's a tremendous amount of role playing that takes place to make sure everybody's comfortable with the pitch and to be able to answer the questions that are going to come up through the due diligence, working with your board of directors or with the PE folks that you're working with that own you. Building that M&A prospective deal memo and completing the strategic plan. I call it a battle plan. Understanding the integration piece. You got to work on this on the pre-closing to make sure it's a smooth and a collaborative integration. The real value is realized by the seamless integration. So having the knowledge is key. The due diligence and the coordinating the buyer's questions, coordinating the bids and finance the arrangements, creating the investor pipeline of strategic and PE buyers. We also invite selective EMBA graduate students from INSEAD to help the companies build their virtual data rooms. They work side by side with the fractional CFO and legal teams. They'll also work on the M&A financial modeling. So we're putting the modeling in the virtual data room to make it easier for the strategics or other private equity firms to come in. And it's in Excel, so they can actually manage or refine the modeling to what their needs are. But again, we're saving time. We're showing it's extremely easy to work with us, and that makes it easier. I had a privilege of looking at the CVs from these EMBA classes students. Unbelievable. They're working for some of the global 500 companies, many of them, or entrepreneurial firms. I see the US Canadian companies are sending senior and emerging leaders over to the program to get an overseas experience. So it's kind of neat.
That makes a lot of sense. And you're certainly delivering a ton of value. Why is it? So these, some of these household name companies that you're working with, tens of thousands, hundreds of thousands of employees, certainly divisions and departments full of executive vice presidents and bureaucracy. And why is it? Obviously, you're not the only, ICG isn't the only boutique management consulting firm in town. There are probably hundreds. What do you feel? I mean, you started to allude to it, but I'd like you to do a deeper dive. What do you feel differentiates you in that you're able to do so much more and achieve such great results that maybe some of the other more well-known management consulting firms can't do?
Even when you look at the fine work we're doing at the Private Equity Profits podcast, we've interviewed about 53 individuals at this point, and they manage anywhere from $30 million to $3 billion. The ability to listen to what their needs are and what they're seeing, and then incorporate the value that I have and the team has on actual operational strategic deliverables, I think is the magic. And then the expertise in multiple verticals, meaning anything from energy and hydrogen. I sit on a multitude of webinars and seminars in the utilities that actually keep the power on, and we're looking to do, legislatively on a global level, they're going to move to decarbonization too quickly, and it's creating this increase in rates. So understanding holistically the sanity behind, we're going to move to something that's decarbonized, but can we have a voice at the table so that we can actually do it in a seamless way? So we don't have brownouts and blackouts, which California has had. And then they're also looking at, we had a freeze that took place last year down in Texas that affected the energy or being able to actually produce energy. So they had natural gas, but the pumps weren't running. They were frozen. So they hadn't hardened the system for weather that normally doesn't go down that far. Pre-recording, you suggested Florida is going into what temperature for this weekend?
In the 20s.
So you can see, global warming or freezing, it's just this natural.
But you're obvious. We're not, you and I aren't in the same location. Yes, we were talking. I have a client in Florida said we're in the 20s this weekend. And I said, Buffalo's in the 40s. Buffalo is now warmer than Florida. It's crazy.
Unbelievable. The other idea is when you look at working with our organization, we look at the pre-diligence. In other words, say one of the PE firms is going to look at doing an acquisition, a potential acquisition. I think we need to do the pre-diligence. So the ability to go out and look at the deal flow that's available and to be able to compete with some of the strategics. So the strategics are in a position where they're going to target companies that they're in their sphere of influence, and they're probably able to pay more for the company. The hypothesis behind that is they probably can remove more costs because they have the whole back office that's already set up. And the portfolio company may be a little bit more diverse when you take a look at the multiple types of verticals some of the PE firms live in. It's not always strategic, in one particular area. So the back offices may be multiple back office where the strategic can just incorporate it, may have the whole sales force that's taking place that's in. So I guess the theme is being able to work with us to take a look at some of the earlier companies and bring them onto their radar in a seamless way, and to build those strong, friendly relationships to help those companies scale earlier. It gets us a seat at the table when we want to pull the trigger to consider doing the acquisition. So we're trusted, and they're more apt to do the deal with us than do it with a strategic because they have a relationship with us. So, you're trying to avoid the auction process, which means the valuation is going to be higher and you're competing against other private equity firms. By taking the time on the front end, you won't have to go through that piece of overpaying for a business, which, is going to be difficult. And you could see the cost of money, because normally the old days, it used to be 20-80. We'd put 20% of our money in, 80% we would do with a loan. Now some of the folks are going to 40-60, where you got to put 40% in and you're going to leverage the other and 60% with loans. So we got to be a little bit more sensible, the ability to really understand that we can go in our organization and we can work on the path to profitability. We've got fine people like, I bring you in on some of my consulting and your team over at Market Domination, where you go in and you really understand their best customers. And we can get you lookalike customers. You figured out, what are they really, really good at? It's extremely highly profitable. Okay. It's got great margins. We're really good at it and we get paid. And we just bring in more of that into the firm. So we're really good at it. It's highly profitable. We love doing the work and we get paid. And that's, the lookalike customer is just a magical way to actually take the top of that sales funnel and fill it with folks that actually will enjoy doing business with you and may not know about you, for that portfolio company. Other things that we'll do is, the idea of the due diligence piece and the integration piece. We stress that very, very early on, because that's where all the value is going to be generated, is on the integration side. So if we don't communicate with the company we're going to acquire on what that integration is, how payroll is going to take place, positions, employment contracts, the rumor mill starts. You can lose some key employees at this point if we don't address that early. The conversations or all hands meetings, or empower the founding team members of that company to be able to communicate with their team and help them, with that integration piece. And I think a lot of companies lose value very quickly, post-close, when they don't address that early. So bringing in the integration teams and the folks that are going to be working with them and have those meetings earlier with the portfolio, that company that we're looking to acquire, I think is the key piece of it. Other things we work on defending the profitability of the portfolio companies, how we preserve and grow channels. Okay. If we need to, we'll get into the restructuring of the companies if it's no longer growing, especially since these companies are most often, they're over leveraged. We'll achieve value creation thesis, promise to the investors, the LPs, the ability to understand their context, and the leverage that's in place. We need to generate cash at the end of the day. Recently, it's getting more expensive on the LBO debt. So the ability to go out there and bring in the really thoughtful leaders on driving revenue and scaling, I think, is really important.
I think that all makes a lot of sense. You've worked with, again, some household name companies that we all are customers of. Out of curiosity, how does an ICG get in the door at someplace like Walmart or Best Buy?
Usually it's something or an opportunity where we're meeting them at a trade event. All right. And we're going to go in and we're doing assessment and listening. There's some pain sitting in there. There's some obstacles, even Amazon, the early days of Amazon working with their fine organization was working with them on product returns. Think about this. For Walmart, Amazon, in the major retailers, 12 to 22% of everything that's sold is returned.
Wow.
It's billions of dollars worth of what do we do with these products? Somebody's going to need to, are we going to end up putting it back in inventory? Are we going to return it back to the vendor? So, I have that whole expertise. I'm one of the foremost experts on a global level on reverse logistics on the supply chain to understand how do we slash the amount of product returns that come back? And some of it's going to be technology. The data is sitting in the database at this point on the returns. To me, this is the opportunity on the AI and machine learning to figure out. We have vendors that we may be putting their products on. They have a high return rate. There's systemic or serial defects in their products, and the products keep coming back, meaning we're losing money by selling that product line. Should we continue to carry that product line? Or what we can do initially is we can have conversations with that particular manufacturer, vendor, OEM, to say, this is what we're seeing on the product. This is what we're hearing. This is the data set. What's the corrective action? We're here, we enjoy selling your products, but we can't continue with this track at this point. It's unprofitable for us to continue to carry it. And it's not like Amazon per se has slotting fees where if we went into a supermarket or Macy's or others to get the products onto that shelf, the retailer is actually paying or receiving money from that particular manufacturer at that point, and it makes it a little bit more conducive to put a new product on the shelf. If we go back to Home Depot or Lowe's, we've got relationships there. If they open up a new store, you're going to put the product free into that store. We'll pay for whatever sells when we go to reorder. Interesting, right? So the business models are starting to look at what the real cost is to be able to do business, and they're pushing the cost onto the vendors. The vendors are in a position, if they've got returns and there's a serial defect, they should be pushing that back onto the folks that they're buying components on. What failed? So the data is in a position to be able to help elaborate that. And what happens when you push that back down, the supply chain, people start to listen and they put out better, higher quality products because they get the chargebacks. Other things we have is smart systems. When an individual checks out, we have the ability to send that data to the vendor immediately. It's available on a portal. And the portal can also share sending the data to the component manufacturers and the sub-assemblies, and maybe overseas. So the idea is they're going to start to see what the movement of things are earlier so they can look at being able to order not just in time, but predictive analytics to keep the supply chain moving in a seamless fashion, which has been very, very difficult with COVID. And we can still see with some of the children's medication, antibiotics, formula, diapers, there's shortages. So the question is, why do we have shortages? Some of that can be prevented. We also have the other side of it, the predictive analytics. You may have demand where people are stocking up on products and they're pulling forward, meaning they're hoarding. At that point, you can't go out there and build another plant. Okay, because at some point the sales are going to stop. So, how do we communicate with the consumers at this point? There's plenty of inventory, but not to hoard. And those are some of the marketing messages, that can be brought into a market to try to help. Yes, I've worked with Walmart, Amazon, Best Buy, on the retail side. But what we're finding with those partners, they keep turning on their vendors to us. The vendors are who are struggling. And that's where those high-end conversations take place. And the vertical knowledge of how do we go into a portfolio company for a PE company, it's because of all these touches that we've had in these multiple companies, solving real day-to-day challenges that they have. We bring that knowledge forward and we share best practices within, the PE firms. And very little is new. And it's about empowering team members inside those organizations and really understanding if we surround ourselves with really, really bright individuals and we remove obstacles, the team gets to collaborate and thrive. You go into some companies and they're getting micromanaged. Not best practices. It hurts the culture of the company. We have to trust the employees. We have to put the tools in place. I've had somebody else came to me, part of looking to do a raise. A brilliant company. It'll be probably $100 million company, and it's doing AI in the banking industry. but it's measuring all productivity and touches of all the financial, say we're doing a home loan or we're doing a car loan. There's a process in place to be able to say, yes, the individual is creditworthy. And they're looking at the actual, what does that process look like? And they're putting the AI machine learning to, why is a human actually touching something where we can automate it? And we can bring that individual, it's not about laying people off. It's about how do we provide a higher level of care and education to the team members so they can actually provide more value versus something that's redundant we should be automating. And those are some of the, the tool sets that are sitting out there. And that's the value when you see the deal flow that's coming in. I mean, I have electrolysis, hydrogen. They don't need to desalinate the water. So it eliminates a whole process of all the electrolyzers that are out there in the world at this point. They need desalination of water. This unit actually will work better with the salt, meaning salt water in the unit, and it can use any type of water. So again, early things or earlier technology that the PE firms can write a small check. What's a small check? It could be $5 million. It's going to be a $100 million company. Think about the valuation and the amount of equity that you can sort of get now early, and then bring the tool sets that are available to inside the PE firm to bear on that entrepreneurial company to allow this to thrive. And to me, it's licensing revenue. And then they can also do some manufacturing. But that's, some of the core examples,
Yeah, it makes a lot of sense. So we know your time's incredibly valuable. We greatly appreciate you spending some with us. For our viewers and listeners who are watching or listening, what is the best place for them to get in touch with you and learn more about ICG?
It's very kind of you. You can find me on LinkedIn under Cliff Locks. That's LOCKS. My website is investmentcapitalgrowth.com. Again, that's investmentcapitalgrowth.com. You can email me at cliff@investmentcapitalgrowth.com. You can reach me by phone at 631-338-2114. Again, that's 631-338-2114. I look forward to adding value to your PE firm and the portfolio companies. Contact me to start a conversation. Seth, it's been a privilege to be with you today.
Thank you so much for joining us. Thank you, everybody, for watching or listening, and we'll talk to you or see you next time on the Private Equity Profits Podcast.